All right, what up, guys? I hope everybody's doing good. Figured I'd shoot you a TA video of my portfolio picks. I did make a video. I'll put it either on the end card or the end of this video. It's called Portfolio Picks. It has the Godfather and a guy kissing the ring on the thumbnail. And then the last TA video I did has a similar thumbnail to this with the glasses. I'm going to kind of keep the theme. I'm just going to tell you straight up, I'm going to look at the market with fresh eyes. I've taken a few days off. For those of you who know me, know that I'm really good at technical analysis. I know you guys have been really wanting TA videos. I know why you want them, to keep you up to date. But it's the same reason I haven't been making them. It's just experience. The reason that I didn't trade for 40 days was because I have traded in sideways choppy markets and gotten my fingers burned and lost money. And I'm a mathematical person. I work off probabilities, just like our algorithm that we've been working on for years. The reason I showed you yesterday that I did 26 scalps while I made the video and got a 94.29% win rate, and today did 92% plus win rate on 56 or 58 trades, it's because I have a system. So if you're interested in technical analysis and you want to know what's going on with all the biggest companies, which are the ones in my portfolio, it's going to be crypto and stocks we're going to go through. It's probably going to be a long video. I'm going to have timestamps. We'll keep it fun. For those of you who don't know, I've been in the finance industry a long time. But I've also been in the music industry a long time. So I like to keep it fun. I'm an artist. That's why I do crazy fun thumbnails and throw in music and stuff like that. But I didn't really trade for like 40 days, and that's hard for a guy like me that likes to trade. But any pro full-time trader will tell you basically what I'm going to tell you right now, and that there's just some times in markets where you can't trade, and it's not your fault. And only thing you can do is recognize that you're not supposed to trade and stay out and be patient. You can't control it. Right now, it's the charts are being controlled by the Fed and the media narrative. They don't want markets to go up. But there's different ways to look at markets, okay? So we can look at TA, and we're going to, because we need to do a health check. I mean, this is what I do for a living, so I need to always know what's going on with my stuff. And the companies I have are popular, big, major companies. So, this will be a good video. Again, I'll have timestamps. You can kind of fast forward through it if you want to know what's going on with DocuSign or Netflix or CrowdStrike, Nvidia, Disney. We'll go through them all. It might be long, but I want to be thorough. And guys, we have a Discord. If you want to know how I'm always getting high 90% rates, well, it's because I've been working on this algorithm for 2 years. Brought in a partner. He's like a master at coding, and he's putting everything I want on the charts. We have all kinds of like secret data that's built into this thing, into the coding. We're about to release it. We'll always have updates, but you can come in the Discord. The link is in the description, and we have that Twitter and the Instagram, and here on YouTube you could follow along there. We're going to be setting up maybe some free trade alerts, that even come through Twitter, just to help people out. But yeah, come in the Discord. It's free if you want to subscribe and you want the algorithm and one-on-one coaching, and you want, other stuff like the courses and the Wheelhouse Wednesdays and trade alerts. By all means, there is a 50% off code right now. It's WH2023, Wheelhouse 2023. The W and H are capitalized. So let's just get started. I'm gonna take my time. I'll play some different music, probably either that I made. I've been a drummer forever. I play guitar, I play piano. I've been a DJ for 24 years, toured for 11, wrote 73 records. So if you hear all kinds of music stuff, it's just because I love music, I love art, and during the bear market, I have to do things like play guitar and spin music to not go crazy in a bear market. It's just my medicine. So I will put the timestamps in. I am going to take a thorough look. I'm just recording, but this is my job. This is what I do at night anyways, and I'm going to have fresh eyes. So I'm going to take it from the top. I'm going to look at the indexes, and we're going to look at the watch list, my portfolio, and then there will be stocks and crypto in there, okay? So let's kind of get it started. Look, I hope everybody's doing good. We did have a risk on day. yesterday in the markets, and you know, December was really bad. You know, people probably will put money in 2023. I don't know if it'll be the first day, the second, third, but it will go in. And the reason I know that is because funds need to make up and keep their clients and get their bonuses, and they need to make up for some of the losses and damage that took place. I think a lot of funds really were working on mitigating risk through 2022. Maybe doing some small buying or some DCAing or some repositioning on the quad witching days. However, I think a lot of funds got burned with the Tesla drop, and it really offset their numbers at the very end of the year. And a lot of big money's pretty irritated with that. So they got a lot of work to do. Heads are rolling. People are probably getting fired. Bonuses are not coming in the mail, and you know, it's time to get to the grind and work and make sure that the losses, you know, don't, you know, take the portfolios down and lose clients. So I would think some money is going to be coming in first part of the year for repositioning. We did have a good day on Thursday. And as you can see, everything in the watch list, my portfolio basically is mostly green. It's good to, you know, get money back. However, December was pretty savage, right? In fact, I heard on TV it was the worst December since 2018. But I mean, I kind of just know that from memory. It certainly was bad. And, you know, will we get a Christmas rally? Did it already start? You know, I don't know. I honestly don't know. What I do is I pick good companies for the hodl, and I didn't start buying until the indexes were basically right here. This is where I bought, right here, and more right here. And I've just been kind of holding through this whole thing. I mean, this looks like classic distribution, like it's going to come down. But one thing I wanted to say, and that I noticed about the Dow, is that it did do exactly what I thought it was going to do. And what I did not think it was going to do was break out of the primary downtrend. I didn't think it was going to do that. I made a bunch of videos saying I think it's going to come up and reject, and it's going to bounce all the way back down and kind of do this number until about September of 2023. So when it broke out, hey, I wasn't going to complain. I walked us through it. I was like, okay, we broke out. We probably will retest. Then we did. We broke out. We failed. I made a video, and I said, you know, hopefully, it was like probably over in here. And I said, hopefully we just retest the downtrend. So yeah, it was like over in here somewhere. And I was like, hopefully we just bounce off the primary, and we did. Now, if you notice, what I haven't told you, because I haven't made a video about TA, is essentially we did bounce, which is good. But we're kind of just going sideways, and you just always have to remember, and the reason I always talk about the Dow, sorry if I beat a dead horse, but the Dow is really, really important and should be paid attention to, because it truly is a barometer for the economy. The reason it's going sideways, well, actually, let's back up. The reason that it went up is because we got bullish data, okay? We got the thought of the Fed slowing down and inflation coming down and data showing, you know, positivity, and markets, you know, maybe it overreacted a little bit, but, you know, that's what markets do. And it jumped, and, you know, the data was showing good. But then the Fed right over here came out and just, you know, even though we got a second inflation report, which should have let us get through this trend reversal of this old pivot high and this big pivot high right here. This would be a confirmed uptrend, a breakout, and a trend reversal if we went above it and held. It would have been great to go above it, bounce, and then go. That would have been insane. It would have really looked good. And, you know, I think what's going on is, you know, we're just building this huge base. And in fact, I know for a fact that's what's happening, because I've just looked at charts a lot. It's what I do for a living. So we're just building a huge base, okay? And like I said in the last video, it's going to be bumpy. It's going to do its whole thing. And eventually it's going to make this big base, and it's going to launch out of it. Kind of like right here. Okay, this is a base, okay? And there's your COVID drop, there's your V-shaped recovery, there's your money printing, and there's your, you know, bounce beginning of a bull run. But it's not official till you break the peak of this one. Just like we're in the middle of the base, like over here, but it won't be official till we break this one. However, you want to be in for the ride, no matter how bumpy it is, because if it did bottom, you know, you want to get these low prices like I did. Now, even though I bought the perfect day at the bottom of the Dow on these bounces, you know, most of my stocks are still red, even though this looks like it went way up, because I'm not just buying the Dow or the NASDAQ. I have other stuff like Coinbase that got wrecked. I have a lot of Tesla, which I continue to buy. I believe in Tesla long term. It's gonna have its overreactions, and there are problems, don't get me wrong, and it could go lower for sure, and we'll look at Tesla today. But in the end of the day, is there really any competition for Tesla in the electric vehicle revolution? They have their own charging ports. Their cost of vehicles are low. They have their manufacturing on point. They have their supply chains on point. They control a lot of their own manufacturing, which is really key to keeping the cost down. I mean, it goes on and on and on. I mean, yes, he sold shares, and yes, he's distracted and has a lot going on. Elon, I'm talking about. But, you know, in the end of the day, Tesla will be very good long term, and a lot of them that are red in my portfolio I still feel completely fine about. Some of them I get a dividend on, and we'll go through them again so you can see what I have. I have about 50% of all my money in, and that's about as far as I want to go right now. I really want to see what's going to happen here, because, you know, realistically, the data is showing progress, that the rate hikes have been working and the inflation is coming down. However, like I've been saying for a long time on this channel, the other parts of capital markets like real estate and credit and just, you know, the job market, layoffs and stuff, that follows the stock market, and the Dow is a leading indicator. So when there was good news, it was leading and it was pushing up. When there was shaky news, it got shaky. When the Fed said, hey, it's going to be bad, we're going to have slowing growth and let's not get ahead of ourselves, it freaked it out. But notice how it bounced right here and it's gone sideways. Now, Bitcoin's done that after FTT, and we'll talk about that too. This sidewaysness right here is just the barometer for the economy, the Dow, not knowing what's going to happen. I mean, it's confused. The data is showing good, but the Fed is saying bad. So it's just kind of in a holding pattern. Plus, in December, what you got to know is that wealthy people, they take time off in December to go see family or go to the Hamptons or go on vacation. And a lot of them have not come back. There's tax loss harvesting at the end of the year. There always is. And then remember, funds need to reposition at the beginning of 2023. Usually it's pretty close to, you know, the first couple days of 2023 that they will be putting money in. You'll see that in the volume. You'll see that in the momentum. It's about following the indexes and then locating the sectors, okay, and then finding the leaders in the sectors where the momentum is and then trading that. And when it comes to trading, it's all about momentum and you know, filtering down things. When it comes to investing, you want to identify the pivots and the bottoms. You want not just technical, but fundamental. A lot of people fear decelerating earnings, and it should be something to worry about, because typically, you know, when you go into a slowing growth or let's back up a little bit, a lot of money printing, quantitative easing, and, you know, interest rates are low, markets will flourish, tech will flourish, but people have money, and so they spend money, right? They buy things. And, you know, as there's quantitative tightening and rates go up and, you know, people need second jobs or they get laid off, the demand slows and they don't buy as much. So this is about when you start seeing the deceleration on earnings. And one of the guys in my group posted a picture in the Jedi chat area showing the top 10 shorted stocks. And I looked at it, I was like, gosh, I own like 7 of those. It was like Google, Apple, Microsoft, they're all being shorted. You know, when the biggest ones fall, you're pretty much at the end of the bear market, guys. And when they fall, that's usually when it falls pretty hard, because they're the ones that have been holding up the indexes, even though even though you could say they haven't done a good job. But still, they have really, you know, been holding up the indexes. So when I look at this, last time I looked at this, guys, I'm just going to take my time with you. I'm just going to do a TA video. If you're interested in TA, I'm like really good at TA and assessing things. I have not looked at everything. I'm going to look at it with fresh eyes. I'm just going to talk. I'm going to give you my assessment and we're going to go. Okay. So what I see here at first is, you know, I see the rejection, okay, but I see right here a double top, okay. I also am seeing this pattern, which is a Wyckoff distribution pattern, and a really good way to see that on the daily is just go back to Bitcoin. This is the same kind of thing right here. Notice right here how this does this. Okay, well, go back to the Dow. And yes, it's not a top. Well, I guess you could say it's a peak of a top. But doesn't this look similar? How it's jagged and rounding, and that to me doesn't just look like a double top. It does look like distribution to me as well. I sense fear. Yoda senses fear in the market. Sideways is because we have good data and we have bad Fed narrative and media cycle. So we're getting indecision on top of people taking vacation, reassessing, getting ready for the new year, okay? So with the Dow is the leader, okay? It's a leading indicator, more than the SPY and more than the Russell and the NASDAQ. Even though it's indecision, it's still on the outside of this blue descending primary downtrend. The primary downtrend is the first thing, okay? You gotta, what side are you on? Are you on the top side or the bottom side? If you're inside of it, it's bad, okay? If you're on the outside of it, it's progress, right? So even if you were to kind of draw in like a primary downtrend over here with all these touches, and I'll make it blue so it kind of makes sense for you guys. So this one, like, you know, it came down and it touched it twice, touched it again. And, you know, when it broke down here, we started making lower highs. Okay, that's when this new primary downtrend started. Okay, so you were on the top side of the primary uptrend. That's a bull run. Then you started making lower highs and, you know, you're in a primary downtrend. Sorry if this is like basic TA. I'll dial it up here in a minute, but you know, we get new subscribers and you know, I want to kind of, sometimes it's good with fresh eyes. Like me, I took a few days away from the market and you know, it's good to kind of just come in and assess things. And you know, I don't really care if it's a long video. If you watch it, you watch it. If you don't, you don't. But in the end, there probably will be quite a few things that I say in this video that you can learn from that will be really good. Because I'm gonna do a deep dive here. I just decided. I hit record. I didn't know what I was gonna record necessarily, but this is what I'm gonna do. So the Dow's the leader. I'm just gonna assume that the SPY. Yeah, look at the SPY, man. So lower highs. Look at this. This is a reverse head and shoulders. Got a rally, perfectly on technical. So lower highs to higher lows. Reverse head and shoulders, but bouncing perfectly technically every single time. Got up in a channel. Hit the primary, fell out of it, tried to break back out and fell hard. The SPY got rocked. You know why? Because Jerome Powell came out and he said the economy is going to be slow. And, you know, they're thinking, you know, like 6 quarters of slowing growth, 6 more quarters. So all the way into 2024. And sure, that's scary. That just means that people aren't going to have a lot of money and they're going to continue to wreak havoc on the stock market, the crypto market, and the demand of spending, which will be through the labor market or job market, however you want to say it. So SPY definitely has that same kind of top, but see how it's inside of the primary downtrend. So usually the SPY will follow the Dow, but I notice right here, and it might be hard to see, it's going sideways too. So again, indecision, but at a support. Okay, let's look at the NASDAQ. Now, tech likes it when inflation comes down, but you just can't fight the Fed. You just can't fight the media cycle, okay? When they don't want it to go up, they don't let it go up. We can do TA and we can be masters of TA, and we can know every chart pattern and we can know every single thing about volume and have our systems. And yeah, I get very high win rates, but if you notice, I didn't trade for almost 40 days. That was really hard for me, but I didn't do it. You know why I didn't do it? Because I've been doing this a long time, and every pro full-time trader would tell you there's just times where you can't control it. You don't force the trade. If you do, your little fingers are gonna get burned because sideways choppy action is hella dangerous. My first time I started trading was yesterday, and I did good, 94% win rate, made some money. Today I did really good, made good money. But it was a risk-on day, you know? I look at my indexes and I look at the momentum, and I just had to wait. You know, I don't like getting caught up in the sideways choppy action because I've tried that before, and you know, I'm a very mathematical person, and I learned from my mistakes. So probabilities are very important, and probabilities were high that I would get paper cuts, chopped up, and take a lot of losses. And so it's better for me to just stay out for 40 days because there's always another trade. There's always going to be a risk on, and I'm not desperate to make money every single day. I don't have to. So I can wait like a hunter, like a sharpshooter or a sniper, whatever, and I can take the headshot. And that's what I did on Thursday. I took the headshot. I came out and I took a headshot and I made a bunch of money, you know? And will I trade on Friday? I don't know. It just depends on really what the action looks like. I don't trade for the first 30 minutes of the morning. I wait for the market to kind of like, you know, it goes through its bouts of volatility in the morning, and then I jump in, you know? So yeah, I mean, the Russell's doing the same thing, guys. I mean, everything has, I mean, there's that distribution pattern again. And yeah, that's definitely a distribution pattern right there. No question in my mind. So yeah, let's look at some stocks. Let's look at my portfolio. It's called Smart Cookie. And yes, it's like a mutual fund. I have a ton of stuff in here. So let's just start at the top. We'll look at dailies. Now, I'm sure a lot of you guys want to look at Tesla. All right, guys. So my trading view crashed when I was in the middle of Tesla. So I'm just going to start it over. No big deal. If you're this far in the video, you know, we're going to learn some stuff because I'm going to take a look and I'm just going to give it to you straight. Now, just so you know, I have about 1,100 shares of Tesla myself, so, you know, I'm feeling your pain too. I started buying, I think it was at 225, there's a support there, and then I bought each support down. I'm ride or die, like till the wheels fall off with Tesla. I've made a lot of money. My brother is a truck driver. You know, he's got his own business, and he has a very big client, a publicly traded company, Caterpillar, you've heard of him, and he delivers parts for them. But you know, he became a millionaire off buying Tesla a long time ago. So you know, we started our journey with Tesla back in 2016. It didn't do anything for about 3 years, and then in 2019 it just started rolling, and we've just been running it. So yeah, let's just zoom out here real quick. So is this thing turning into an Alibaba on us? Okay, it's down almost 71%, so it was down more. Okay, look at this blue line. See the dotted blue line right here? It's below this blue line, which is a pivot low support. It's actually right on this pivot high of this base where there was a breakout. This is classic, like, O'Neill base breakout, and I love the Zanger, O'Neill, Minervini. I mean, that's what I follow. That's what I teach you, is from those guys. We just updated our algos, but essentially all my training is, you know, from those guys. And William O'Neill, you know, they tested his system against 50 other systems, and it beat the S&P by like 2,700+%, and it won 10 years in a row. So I'm the kind of guy that goes to the best to learn. And same with trading. I want to learn breakout trading. Well, Dan Zanger turned 11 grand to 42 million. He's like the best breakout trader, him and Minervini. So yeah, I pay attention to bases, and you know, a lot of my knowledge in trading and investing comes from them. And there's a lot of other guys too, David Ryan. There's a whole slew of them. I've read everybody, but and there's things I like about, you know, a lot of people, but really the core is always going to be O'Neill, Minervini, Zanger, Wyckoff, Dow. You know, I like some Fibonacci stuff, and I love the on-chain data that Glassnode does for blockchain. I love that, and I fell in love with crypto. I haven't been in crypto as long as most of you or some of you. I've been in it less than 3 years. So I got in, I think it was around 9,000, and I want to say that was 2020. I'll look at the Bitcoin chart in a minute. I think it was like 2020 or 2019. I don't remember, but it was like the end of summer is when I first got into it. Now I heard about it when it first started because I've been in stocks forever, since 2004. But and I remember those guys on Wall Street. Nobody really knew what Bitcoin was back then, but I remember they were so excited about it. And but being a momentum pivot to pivot directional trader, you're automatically going to fall in love with crypto. If you've been on the channel, you know that like my accuracy and predictions have been like incredibly good. There has been like 3 that I completely failed on, and if you go back, those 3, 2 of them were black swan events that nobody knew about. But other than those, pretty much hit it on the nail, on the nose. So, you know, and that's why I made the video, the how the Fed stole Christmas, because it is clear as day to me that you are in an upward battle and fight if you're going to try to fight the Fed and the media cycle when they want this to come down. Now, I sometimes get a tinfoil hat. Okay, I can't help it. You got the Twitter files going on. You got the administration. Obviously, you know how they are to anybody they don't like. So, you know, it's possible that Tesla, you know, is a big one in the indexes. It's possible that it's getting a big sell-off behind the scenes under attack. But it's also, you know, simply investors are sincerely worried about Tesla because Elon's distracted. He's messing with people on the Twitter files, which is great, you know, that he's actually getting all that stuff out that I thought was the truth this whole time, to find out that I was right the whole time. So yeah, investors are, you know, they've made a lot of money with Tesla, but at the same time, they are worried because it's a lot of uncertain times. Part of it's because of the bear market. Part of it's because of the sell-off. Part of it's because of his distraction. Part of it's because of his nonchalant. And I tell you what, I'm just going to be straight with you. If Tesla doesn't have a good earnings, which is possible, because in the automotive industry, the first quarter is usually the slowest quarter. And if you go back to the last quarter that they reported, it wasn't bad. They had logistical issues, but the demand is there, and the demand is going to be the key to an acceleration cycle or a growth phase. All stocks, all crypto accelerate and decelerate and get re-rated. And what's going on right now in the markets is a lot of re-rating, whether it's energy or it's Tesla, okay? So this is all just part of it. I've talked about it in my books. Minervini talks about the acceleration, deceleration cycle in one of his books. And yeah, it's just all part of it. It's cyclical, you know. So, you know, Tesla, it's kind of crazy if you really look into it. Their PE is lower than Coca-Cola's PE right now, and lower than like Chipotle that makes burritos, which I do like their burrito bowls. But Tesla shouldn't probably be that low. And one thing I'm just gonna ramble. I'm just gonna say what's on my mind. I think you guys appreciate that about me when I just keep it real. So there's a big misconception, and I'm going to go back to William O'Neill here, who's my mentor. There's a big misconception about PE. Okay, analysts love to use it, economists love to use it, but how many times were analysts and economists right in the last 3 years? 2%, 3%? No, they're horrible. But William O'Neill's right a lot. And he says in his book, and I'm a pretty firm believer of this, what I'm going to tell you, and you may disagree, and that's okay. Or this might open your mind, and hopefully it at least opens your mind to think about what I'm going to say. So when it comes to price to earnings ratio, a lot of people, a lot of, well-known CIOs and financial people, they really look at price to earnings ratio. And sometimes they'll look at what's called a TTM, a trailing 12 month. When the PE is very high, you'll hear a lot of people say, oh no, the PE is too high, it's going to fall. Well, yeah, everything goes up and down in an acceleration and deceleration cycle, or phase 1, 2, 3, 4 in the overall cycle of the bull and bear run, which is in a larger cycle of a secular bull and secular bear. But zooming all the way in just down to PE on an individual ticker, the reason that a price to earnings ratio goes really high is because the company is doing good. It has a multitude of positive things going on for it. It either has a CEO that is doing really good, it has a product that people want, it has demand, it has innovation. Okay, check for Tesla, because we're talking about Tesla. And the demand is high, therefore people bid up the price and the PE goes up. Now, all the biggest runners in the history of the stock market, and we can do a video on this, this is fact what I'm saying. I just don't know all of them. I know AOL, there's a whole bunch of them. Qualcomm was one of them. Yahoo was one. There's a whole slew of them. Broadcom, I believe, was one. There's a bunch. They all had extremely high PEs in their mega bull runs, and going back to O'Neill again, they go through what's the first stage, second stage, third stage bases, and what you got to know is that a high PE means the company and their products is in high demand, therefore it gets bid up. It's popular, there's less liquidity or shares for it, people want to buy it, they're willing to pay more. But Chris, here's the other side of the story. But Chris, I've always been taught that if it's a low PE, that it's better. Well, okay. In some ways, that makes sense. And it really makes sense for the long-term investor. Okay, because what that means is when you have a low PE, you are getting, that means value. You'll hear that on TV and stuff. So you're getting value, you're getting a discounted price. But why is it a low PE? That's what you have to ask yourself. And that's what O'Neill puts in his book. The reason that companies have a low PE is because they're not doing good. They've upset their investors. Their products are getting recalled. They are stuck in a bunch of lawsuits. They're not creating new things or meeting their timelines, so they're decelerating. It's a natural process. All stocks and crypto will go through this. It's very, very normal and natural. So whether you think buying low PE or staying away from high PE, just know that there has never been one of those mega winners, those 300%ers that have not had a skyrocket PE ever in the history of the stock market, going back way to the beginning. Now, the way it works with value investors is and going back to Minervini, he talks about this and he explains it great in one of his books, is during this acceleration phase, what happens is you have a very low PE. Your company is beat down to hell. Nobody wants it. They don't want to touch it with a 10-foot pole. Reasons are what we just said. Something with the CEO, something with the product, something with the demand, something with the overall economy. It's just, the cash flows, the margins, the EPS, all these things, the annual revenue growth, everything is kind of going backwards, okay? And now all of a sudden, nobody wants to buy it cheaper. And if you're a trader, you just go short. But what happens is it finally gets down to the bottom of where the PE is the lowest. And that's where the value investors come in and they snap it up for the long term. Now, what's interesting in this acceleration cycle, and I'm starting you at the end of it, we're going to move out of the end into the beginning really quick. So when it's really low, the value buyers come in, they stabilize the stock or the crypto. And that might even start to stabilize the sector. And then out of that sector emerges a leader. There's usually 1 to 3. And those value investors stabilize it. And then the traders come in with momentum and they expand the volume and trade. And then what happens is it catches the attention of Wall Street. And analysts will start to rate it higher, give it a re-rating. Then it has an acceleration in its earnings, and the annual revenue growth and the earnings per share goes up quarter over quarter, but also the same quarter from a year previously. Okay, so now it's showing growth. Now, when that happens for multiple quarters in a row, big Wall Street firms will hire analysts to particularly watch that stock, and then that analyst from Goldman or JP or whoever it may be, there's many firms, they will keep re-rating it. And typically what happens is multiple analysts will work together and they'll have a very similar rating, okay? Because they don't want to look stupid if, it's way off. They'd rather be in the pack. And the way that the market works is value, and then it gets momentum and it catches notice. Analysts rate it, re-rate it. It does this. If it gets like 6 quarters in a row of growth, it's accelerated from value to growth. Okay? Then something happens, usually an economic situation or something within the company, and it starts to decelerate. Okay? Logistics, supply chains, COVID, the start of it. Economic problems, recessions, these kind of situations. The currency situation with the dollar against other currencies in other countries is a big problem, not just for Tesla, but all big companies that do business globally, like Google, Microsoft, you name it. That's a problem. When the dollar fired off and it went parabolic and the other currencies were left in the background, that really messes with the exchange rate for a lot of these companies. So they're taking losses there. Google actually talked about it in their earnings, and some other companies have as well. So this is natural that Tesla, it's got all the right things for it to come down. The one thing that is going really wrong with Tesla is that, and I'm sure Elon knows more than like myself or Ross Gerber, and he brought up 3 really good points, and I have to agree with Ross Gerber. I think they do need a PR team. From my understanding, Elon has fired like 2 PR teams. He also doesn't really listen to his lawyers sometimes, and I do know somebody in a construction field that worked on their Fremont facility, and he told me 2 Christmases ago, he's at my house, and he told me, I'm sorry, it wasn't Christmas, it was when my father died, it was a funeral afterwards, and he was there, and he had told me, he said, we did all this work for Elon, and then he had us undo all the work and redo it a different way after we finished. You can't tell the guy no, or that it's better to do it this way. If he wants it done a certain way, that's how it's going to be done. And I said, okay, well, did you get paid twice? He goes, I got paid twice. And was he happy at the end? He was happy, or he wanted it that way. That's just, and that probably goes down to why the Cybertruck's not out and why the semi's not out. But, these analysts are going to say things like, oh, all these other companies are doing good, there's no reason. Tesla is going to dominate. If you want to have your money in, make sure your hard-earned money goes into the companies that are going to be the leaders of the world. And from the EV evolution, which is not going to stop, it's going to go in an upwards trend secularly from now till 2050 and beyond. Well, Tesla will be the leader. So your hard-earned money, get it while you can. And that's why I bought more yesterday myself, for the long term. Bills are paid, not in margin. Just my thoughts. It's what I'm doing. All right, so we have this blue line, and it is at a base of a support all the way back from July 13th, 2020, which I remember. That was actually usually summers are kind of slow, and that summer was raging. And I'll tell you right now, I remember the exact day. You can even check me on this because this was like, I remember it well. This stock and all the other stocks raged until that holiday weekend, Labor Day or Memorial, whatever it is, like September 2nd, boom, crash for like months until I think mid-October, November, if I recall. So look, this price is insane. Now, here's the deal, guys. Tesla, we could go down to $91.61. That is another support. Where it's at currently is also a support. About 118.89, 119. Next stop below would be $90.70. Call it 91, somewhere in there. But below there, which is viable, we have $64.33. A mini support, which probably wouldn't be the main one, at 57. I think it goes all the way down to 23. Yeah, about 23 bucks, 22.49 or something. Or yeah, about 23. So could this thing get to 65? Yeah, it's 6 quarters of a recession, economic slowdown globally. You know, people get laid off, demand slows. Maybe they, say, hey, I actually can't afford the car right now. More supply issues, logistical issues, economic issues globally because they have 4 mega facilities on 4 continents. Yeah, it could go down to 65. The key levels of support to watch are where it's at exactly right now. It did get its first candle. This did get a blue dot. This is coming up. This is crossing, and definitely buying is coming in. I mean, you're dealing with straight up. I mean, look, these are mega lower highs. I mean, you're in a big pattern here. And essentially, this thing is down here. So, but this will give you a decent idea of how far out this can go. You'd be surprised how often this actually works out correctly. So, I don't know how long you guys have been watching the channel, but I was the only guy on YouTube and even TV being like, do not DCA. The entire bear run, I was screaming, don't DCA. A lot of people asked me why. They weren't mean to me. Nobody's ever really been mean or called me out because my predictions have been so accurate. But people asked me why, and I said, look, people forget their training. Okay. When they went to school for their licensing, or maybe they just forget, or they're newer to the markets. DCA is awesome. 9 out of 10 times. There's one time you don't do it, and it's when there's distribution at the top of a bull run down. So when I showed you where I bought on that double bottom on the Dow, if you've been on the channel, you know that I told you before the double bottom there was gonna be a double bottom, and I bought on that day on that wick at the bottom and made alerts, made videos, made a lot of videos and alerts about it. And when it started to fall, I said, hold the line, and look what happened. It went way, way up. And I said 9 out of 10 times you don't DCA. But when it hit that bottom, I gave everybody the green light to DCA from that point down. So even if it goes down, now you're DCAing. You just didn't DCA for the last year and a half. There's a reason why. You add shares, you add tokens, you're adding pressure. So as it's going down, you're losing money faster because you have, it's like, would you rather have, 25 cents falling down the ocean, or would you rather have a 25-pound weight falling down? It'd be better to take your $1,000 every single week for 60 weeks instead of putting $1,000 in every Monday on Bitcoin. You basically just take the whole 60 grand and you wait till it gets to like 12 grand and you put it all in, and then you really average your price down, and you do it into momentum when it confirms an uptrend. And then your DCA is powerful. You start making a lot of money. Well, people forget that, you know. DCA is for people that don't know any better. It's like the lazy way to do things. You can be a lot more tactical and strategic. However, we can't really say that now, because now we've gotten to a place in all indexes and most sectors where we have established doubles and triple bottoms on a lot of things. Therefore, you do want to start DCAing. And even though Microsoft and Google and Facebook, and they're all being shorted, that's okay. Jump on the short trade, but get those shares for the long hold too. And so Tesla could go down to 65. The daily, it's looking pretty rough. And if you look at this, it says it's not going to get better until March 27th, 2024. I could see that. That doesn't mean that it's going to go all the way down until then. It could break out before then for sure. So let's just take a look at the 4 hour here. And now that we've drawn in this descending, you could see it had a support, it broke it. See that blue diamond? That's institutional buyers. That's a collective of institutional big money, large buyers. And look where they bought. And look what our coding showed. Not only did it show that they bought it, but see those two white arrows? That is our coding showing the bottom finder. That's what that is. And it's showing it on a 4 hour. Your HMA went blue. Everything synced up on a 4 hour. Your oscillation for volume is jumping. Stochastic's jumping. Your vortex is jumping. Okay, this right here is the sentiment is going up, and you're above the baseline here while this is going blue. So you got a sync, a double bottom, institutional whale, and you're bouncing off a support. Like I said, that's a key level right there. Let's look at the 1 hour. In this market volatility, we don't want to trade anything above the 1 hour for safety. We want to use specific rules and guidelines for a system that is, look at that. So look at this. So you got 4 bottom finders, and what happened after? Boom. Again, above a support, you got Jedi green lights. What did I say? You get the green and the blue, and you go, and there's the diamond, and you would have bought right here at 110. Where did I say I bought? 110. Now we're above a support. Okay. So look, Tesla's fighting. Tesla is a fighter. Tesla can make you a lot of money. Analysts can be stupid. Economists can be wrong. Although I'll tell you there's some economists I really like. There's not a lot of analysts I really like. Mohammed Alarian, if I said his name right, I like him a lot. I like Rick Reeder from BlackRock a lot. Very smart. I like him. Yeah, I mean, this is an area, and this is all those areas I started buying at 225 and all the numbers, 212, whatever they were, 100 shares. Yeah, I bought it 11 times, and I will continue to do it. And that's why I'm only 50% in, because I know how this game is played. If you don't know how the game is played, how can you ever win? You want to hear some drums? You want to hear some drums that I did? Check this out. While we're doing that, let's move to the next ticker. DocuSign. On this channel, I had said for months this was a 10-bagger back to the top on DocuSign. I called the bottom, I bought the bottom. I even bought my girlfriend 100 shares for like 4,400 bucks, and told her she might have $44,000 in a couple years. And she's asked me about it twice, and I told her, look, it's not really doing much, but we just need to wait, because in the business community, DocuSign is used by everyone, from escrow offices, attorney firms, anybody that does business with each other uses DocuSign for the contracts. And this is why blockchain, and this is why smart contracts on Ethereum, this is just why crypto is a better instrument and vehicle. Imagine Ethereum is kind of like the modern day DocuSign, okay? And don't think DocuSign is going to go out of business because of Ethereum, because DocuSign is smart. They're actually working with crypto. And, you know, I can get into it, why I like Chainlink so much and Ethereum, but, you know, DocuSign is a really good company. Now, it had a high of 314.33, and it's currently at 54.71. So if you didn't get it where I got it at 42 or 44, when as low as 39, I think I got mine at 44, right in here somewhere, probably on this candle. Yeah, right there, 43.65. So it was like 44. So yeah, I'm up a little bit on it now, and you know, this is what's called phase 4. You're under the 200. All stocks, all crypto have 4 phases. Okay, they just all do. And this right here, even though it might look small, this might look really small, it's under the 200. This is actually a big bear right here. It's just big like this. It's big like this. It's just, this is current on the chart. So it goes below. The same thing always happens. It establishes a floor, just like over here. It establishes the floor. It's called a bottoming process, is what we call it. It takes about 6 months. It's been about 6 months. So there's a bottoming process. It establishes it. This goes blue. Okay. Finally, your cloud goes blue on the daily, and your price action goes above the 200. And then your ribbon goes blue, and you stay above the 200. You go in a bull run. Starts getting choppy, but still up, and then boom, it retested, it fell below, probably scared people, but then there was strength. Institutional buyers, and there's a sync system, had you run up, and there's that classic distribution look, and after that comes your first lower high, and you leave phase 1, the accumulation phase. Phase 2, it's called a secondary trend. This is the participation phase, where retail comes in with smart money. And then you have a distribution phase, and there's usually a big pop just like this in there, just like Bitcoin had, if you recall. So, and then you make your first lower high, and you go into phase 4, which is the bear phase. And to get back to phase 1, you have to establish a floor. You have to have seller exhaustion usually, and you got everything going for you. You're just waiting on the price action to get above the 200. And so as the 200 comes down and the price action goes up, once it crosses, it's officially in phase 1. Now, most retail is gone from the markets. Okay, they've capitulated, they're out of money, they're working 2 jobs. Most retail is gone. But if you're watching and you're this deep in the video, I might be talking to myself, whatever. But if you're this deep in the video, and you cross over this, and even if the price is a little bit higher, let's say you buy it over here at 82 bucks, 30 bucks higher than it is. Yeah, from here to here is $30. So even if it goes, you know, from where it's at, let's say you buy it tomorrow at 55 bucks, and it goes back up here to 314. That's roughly 600%, a 6x, okay? And if it gets this high, that's just the beginning of a bull run, like I explained with the Dow. Once it breaks the all-time high, it starts its next phase of the bull run, okay? And DocuSign is really low. It's a really good company. It's not going bankrupt, and I think it's, you know, for me, I'm happy to have it at these low prices. All right, let's move forward. Let's look at Netflix. Now, Netflix had a really good earnings. They had a lot of subscriber growth. So This is a really good example of what can happen in a bear market. When you leave phase 4, you establish a bottoming process. You can see our coding, you know, it was literally firing off the bottom finder. It retested many times the support and then made a higher low. And then the earnings came out right here. And there was a huge surprise in our sync system. There's the arrow, big engulfing candle, HMA went blue. You already had your Jedi green lights. Everything synced properly. Price action went up to the 200, rejected. You notice how you got your blue ribbon too. And then it kind of just, you know, kind of made these like gentle higher highs. And then it kind of fell down and it's starting to push back up. But this thing had a high of $700 and it's under 300 right now. Netflix is cool to trade. It's like you can make a lot of money really fast on Tesla and Netflix because they can swing $20 in a day, you know, up or down. So let's just look at it on a 1 hour real quick. And yeah, I mean, there's where it kind of established and, you know, did its thing. And, you know, this is where it bumped into the 200 on the daily. And yeah, it's just, there's a lot of headlines in the news that are making, you know, charts difficult to go up. However, when you're in the bear market, it becomes pretty much technically driven. Nothing can save you from the index is dropping due to a macro headwind environment. So as all the narrative is scary, you know, with quantitative easing and, you know, Fed narrative and just, you know, that we got stuff going on with the wars and, you know, geopolitical tensions and it just nonstop problems. Okay. So when you go into a bear market, fundamentals go out the window because like green tides, the indexes will lift all boats, the stocks and sectors. Red tides will sink them. And, you know, essentially you just go technical in the bear if you're going to be in it all. However, once you find a bottoming process and you get to that lower PE, you know, where the price actions come down and you essentially get a really good earnings surprise, then that's when you go from technical only to technical and fundamental again. Fundamentals will always rule, okay? You want to invest your money in companies that are doing good. They're growing, they, you know, on all levels. And, you know, they're also putting money into things like R&D and their ROE is good. It's ran efficiently. There's, you know, you want to start looking at fundamentals. So I think Netflix is a really good example of a classic phase 4 deceleration, overreaction, found a bottom, seller exhaustion, good fundamentals came in, and there you go, leaving phase 4 into phase 1 with price action above the 200. There is another earnings coming, and it says here that the earnings estimates for the revenue is 7.827 billion and the EPS is estimated at 62, almost 63 cents a share. So, you know, you want to keep an eye. Now, if they do good, that's 2 quarters in a row. And now you're going through that maturation cycle, that acceleration phase, and off you go. Like I said, it was at 7, you're at 3, that's over 100%. That's over a double to get back just to all-time high. So just like in 2007 through 2013, when the indexes fell and there was a 5-year recession and the Lehman Brothers crash started to take hold on all capital markets and created a global recession, the market started to fall in 2007, got real nasty October 2008, but it bottomed in 2009 and it went up for 3 more years before it got to break even. I believe we're in that period where smart money is finding the bottoms and they're starting to get in on technical and fundamentally driven companies for the long hold, and it will be bumpy like I showed you on the Dow, how we're building that big base at the beginning of the video. So yeah, Netflix is one you can trade or invest in. Next on the list is Solana. It's crypto. Now, when I'm filming this video, Solana got its head beaten in by Thor and the Hulk, because of FTX and Alameda and Sam Bankman-Fried, which is going on during the time of this video. Could be one of the biggest Ponzi schemes of all time, using user funds, which as this story develops and we're in the middle of it, it has certainly, it looks like user funds were used for all types of things they weren't supposed to, but they had large amounts of holdings in Solana. And Solana also had 6 network outages over the year. It also was hacked for over 200 million. So it's just been beaten down, and it had an all-time high of $260, and it's below $10 right now. This is one of those ones that hurt me in the last half of the year. It doesn't matter how smart you are and how experienced you are. When you're in markets, you have to understand that there is risk and black swan events, and things can pop off out of nowhere that will not show up in the charts or the fundamentals, because the company or the associations of the company, something happens within the inside of those companies, and then you'll see the drop or the rise when it's announced. And Solana was a big holding for Alameda Research, owned by Sam Bankman-Fried, and when they went insolvent, obviously selling off that collateral to pay for attorneys, bankruptcy filings, user funds, debts, happened. So Solana, I'm not sure what's going to happen with it. So look, let's move on to Algorand. Okay, Algorand is another crypto. I do like Algorand. But yeah, look, classic distribution back here, kind of, this kind of similar to Bitcoin, but not as extreme in the directions, except right here is really insane. A lot of distribution, and then just a smooth, slow train wreck all the way down to where it looks like it's starting to find its seller exhaustion. And if you follow the purple line where the price action is, see these dotted lines? If you follow that all the way back, you're essentially down here at pretty much its all-time low. So if you want Algorand long term, well, you're pretty much getting that rock bottom pricing. It's definitely in phase 4. You don't have the price action here. Volume is coming in though. You can see, if I move it, you can see the sharp selling volume. I mean, this is just massive. This is all that FTX stuff I was just talking about. But you can see it's kind of like oscillating up slowly. I think if people are in crypto, they're always going to go, their first choice is always going to be your Bitcoin and Ethereum, because those prices are low too. And there's just, due to supply and demand, which really controls everything, with Bitcoin specifically, with a lower supply, it's always going to be in high demand, and it is more stable. Even though it's crypto and it's not as stable as some things, it's going to be more stable than some of the altcoins. So one of the ways that I like to trade, and I probably mentioned in this video and many other videos, but when the price action gets above the 200 on the hourly, and this goes blue, and then this pink one will go green, and when all those three things happen, and I've just done a lot of calculations with spreadsheets on all kinds of stocks and cryptos, and tested the length of time and the gains and all this stuff. So like for instance, this is pink and it goes below the 200. Look how much money you actually would have made by just following the system. You would have went here from 28 down to 16. You're basically 90% gain on a short just following that system. And now, because of the bottoming process and seller exhaustion, it looks like it's going to make an attempt to get on the top side of the 200. and hopefully that lasts a while going into the new year, and you start to see gains. So if Algorand was one that you wanted, to me, it's looking at 16 cents, that it's pretty much at the bottom right there. Now, it could go lower, of course, but I mean, phenomenal price is all I'm saying. So let's look at CrowdStrike. Now, CrowdStrike is one that just had a poor earnings and got beaten up. And it's one that I really, really like for the long term personally. And I've been buying more into it. I don't have a ton of it. And I'd like to get more, but I have I feel like I have a decent amount. The reason I like CrowdStrike is because of the industry group that it's in. There's 197 industry groups in the stock market, and there's 11 sectors. This particular category or industry group is cybersecurity. And CrowdStrike is, you know, a big name in cybersecurity. It's definitely in a bear run like everything else, making lower highs. And it's been beaten up due to poor earnings and then it's been oversold. Let's just look at the PE on that out of curiosity. The trailing 12 months is under. It's actually negative. That's crazy. Wow. So yeah, it's really low on the PE. Now, it had a high of 300. It's at 104. That's a 200% gain from just where it's at. If you just follow the blue line across, you're actually at the peak of this bull phase of 2019. So you're getting extraordinary prices for an industry group that will be prevalent for many, many years, if not infinite. Cybersecurity, I mean, look at everywhere I look, I see hackers, whether it's a Netflix documentary or comments in my own YouTube channel. Hackers are everywhere. They're just so dirty and scandalous. They're just trying to get over on everybody. I don't know why people just don't have a work ethic and actually just go do honest work anymore. I mean, and my belief is that during this Sam Bankman-Fried FTX collapse and contagion and the regulation that's coming, these hackers might put the nail in the coffin for these regulators to just stifle innovation and just close it all down, because people are legitimately getting hurt. There are so many good people in crypto, but there are some bad people, and there are these hackers that are just constantly trying to steal from people, and it's very unfortunate. So a company like CrowdStrike is good to have in your portfolio, because just like Tesla with electric vehicles, that's going to be something that will grow for decade over decade over decade, because it will be needed, it's necessary, the demand is there, it'll be a leader of its industry group. And CrowdStrike is also in high demand and has all the same attributes and will be a leader of its industry group, but it's currently in a deceleration in its own maturation cycle for the earnings. Give it time. These are good prices for long-term investing. Just the number one rule is you want to buy low. And once you see seller exhaustion and a deceleration, and you have identified that it will be in demand for a long, long time, it will not go bankrupt, then you pick what you want and you wait. And you just wait for this thing to legitimately find a bottom, kind of like Netflix did, or Algorand is starting to show. It's getting a little momentum here, but nothing is really going to change directions until you get to that earnings, which is in 2023, March 9th. So yeah, I'm a fan of CrowdStrike long term. Let's look at the next one here. So we got Cardano, and I'm a big fan of Cardano. I really like its founder, Charles Hoskinson, a lot. I think he is a very bright mind. I think he's true to what and why he created Cardano for decentralized finance. And it's growing on both sides, with new developers and old developers. And I really just like Cardano, and it's really gotten the short end of the stick, in my opinion. There's a lot of hype coins, and there's a lot of stuff going on that's more popular. And, I understand, because I'm an investor and I'm a trader, and I understand momentum, and when something just doesn't move and doesn't have the sentiment, it's certainly not going to be fun to trade. So I don't trade Cardano. The only thing I really, well, not the only thing, but mostly I trade Bitcoin. If I trade crypto. However, I don't just trade Bitcoin, I hold it too. And with Cardano, I don't ever trade it. I just hold it. And I've been DCAing since, I think, 32 cents, and it's at 24. So I'm a little backwards on it. And it's kind of, if you notice, it's just kind of going sideways and slowly fading. It kind of held over here around 31, 32 cents for a while. So yeah, I mean, Cardano is way down, but I am bullish on it overall. It was up about $3.10. So, you know, I just tend to give it time, and I have a lot of Cardano. I saw a video a guy had put out. I just came upon his channel. I like his channel. And he said, you know, if you own 1,000 tokens of Cardano by X year, you know, you're going to pretty much do well. And he had laid out a case for that. And I think it made sense to me, you know, what he was saying. And, well, I have a lot more than 1,000 Cardano myself. So if he's right, I'll do pretty good in time. So that's one I have. Everything in here I have. So Apple, you know, look, Apple, let's look at Apple. It could go down further. It's certainly one of those ones that, you know, if it tests the 200, you always want to buy, because it doesn't do it often. You know, there's amount of time between here and here that it did it, and then you want to buy, and you want to buy, and you want to buy. It doesn't really fall below the 200 often, but when it does, it fought back up, and then it fell. And if you notice where the dotted lines are, it's exactly where its low support of 129.29 was, which is also the peak back here. Okay, way back here in September of 2020, which I remember that drop. So it's either going to bounce from here, and this is the bottom, or it could go to 125.68. This one would probably be more where people would look, which would be 122. Then I think there's one, yeah, 116, 117. That's an area I remember it held at for a while. I mean, I think, you know, it could go to 103. It could also go into the 90s, and this is possible if we really hit south side pressure in the stock market for like global, you know, recessions and geopolitical stuff. If something really bad happens and this really drops, well, Apple is a big weighting in the stock market and the indexes, and if it drops, we're going to have a lot of red out there because of the holdings and the indexes, right? So it could go as low as 90, just like I think Tesla could go as low as 65. I'm not saying it will. I'm just saying, just like Bitcoin could go to 12, it's not there. I don't want any of those to fall, but, you know, you have to be realistic and, you know, keep your expectations realistic, and you have to make plans accordingly for what it's going to do, or if it's going to do that, what you're going to do is a better way to say it. So like for me, I own Apple and I know I'm going to hold it. So if it fell below this spot and it started hitting these supports, I would probably add, and I would be adding more shares the lower it went. And if it went all the way here to 88.99 or 89 bucks, we'll call it, you know, that's where I would really put money in. So just know that when all the big ones fall, it's usually the last. It holds up the most during a bear run, and then when they start to fall and get crushed, you're getting closer to the end of the bear run. So yeah, Apple, I mean, we could look on the hourly really quickly, and I mean, you can see it bounced, it broke out, it rejected, it bounced, it broke out, it failed 2 levels, came up, rejected, bounced technically, hit resistance, broke out, failed, bounced off the 200, you know, made another attempt, another bounce off the 200, another attempt, and then just got slaughtered through this whole support, held, bounced back up, and it's been on a slow decline, and it looks like it's trying to change directions, but we need a little bit more data. And I think the best way to look at it for this one, if you're holding, is just go to the daily and understand the key support levels, and then have a plan and implement that plan accordingly. And again, it's at its low of the year right now, so that is a place where you'll see some momentum and some buying. Okay, Nvidia, there's always going to be need for chips, okay? Even if demand is slowing because they had over ordering and gluttony and high demand due to stimulus and people having a lot of money, people are going to need chips forever, okay? They're going to drive cars, they're going to have tablets, they're going to have cell phones. Chips will always be in demand. There's going to be schools, universities. So Nvidia is a leader in the industry group for semiconductors, and you know, again, buy low, sell high. So I'm very bullish on, you know, holding certain ones like Disney and Nvidia, Microsoft, Apple. So Tesla, as an example, Bitcoin. I love these low for the long term. So you can see it got the Jedi green lights, and it did establish a floor. My sync system went off perfectly right here at 110. And it's kind of rolled up. It rejected off the 200. It's fell, but the green lights have stayed green, which is really positive. It's had a big dive here and here, but it looks like it's trying to turn the corner. You can see the wave is trying to approach the baseline, and the volume oscillation is low, but it is trying to turn the corner. So we'll have to keep an eye on Nvidia. I've been trading Nvidia for the last few days and done pretty well with it. But yeah, you can just see right here, it's kind of established a floor at 138, and it's kind of starting to do its thing. This is on the hourly, by the way. So Nvidia is starting to show some strength, but like Apple, we might need a little bit more data. And so, you know, you got people out of town, you have people waiting for the new year for tax reasons. You also have people that have been selling off the end of 22 also for tax reasons. So give it time, and markets are very data dependent right now, waiting on Fed narrative and jobs report next week and things of this nature. So again, you know, have a plan for what it is you want, some diversification. I like cybersecurity, so I chose CrowdStrike. I like semiconductors, so I chose Nvidia, you know, and that way you're a little bit well-rounded. Unfortunately, you know, the way the market is all red tides are sinking all boats, but leaders will emerge, just like, and I follow William O'Neill on this. I think, you know, he has the best explanation of it, but leaders will emerge out of phase 4 into phase 1, and you'll start seeing first stage bases and then cup and handles, and he calls it cup with handles, but you'll start seeing these cup and handles and then breakouts. And when you get above the 200 with price action and you start seeing these things, the breakouts will start to hold more than they have in the bear market. I am a breakout trader, but you haven't heard me talk about breakout trading for a long time. But when a lot of you guys first met me, before I started the YouTube, or right at the beginning, I was calling them, and we were killing it. We were making a ton of money, and they were all breakouts. I was identifying and making lists every night of all the breakouts that were on approach for the next day, and we were snapping them up, and we were crushing it. We were killing it, and that's how I started getting a following, because you know, I learned all that from Dan Zanger. But you know, breakouts weren't holding in the bear, so I haven't really been covering it, but I certainly will adjust my trading style back to that once we, you know, start seeing those first stage bases and cup and handles. And you know, Nvidia is a hold for me, but I also like to trade it. Ethereum, I'm just super bullish on Ethereum long term. I just really like it. It's definitely been in a bear. It was in this descending pattern, and you know, made major lower highs, of course, and went through the sideways movement like the rest of crypto, where whales and whale wallets essentially were just holding, and a lot of retail had capitulated, and you didn't really have the FOMO crowd, the gambling crowd, the highly leveraged clown crowd. You had more of a sophisticated buyer whale wallet accumulation down here. It did break out of its descending pattern. It bumped its head on the 200, right as FTX collapsed, but Ethereum actually held pretty well. It didn't take as much damage as some of the cryptos did, and that just goes to show you again, you know, a lot of people that are in crypto will probably want to put their money into Ethereum and Bitcoin first, and you could just see that it's held. So I am very bullish on Ethereum personally for the long term. I have a good amount of it. I'm pretty satisfied with what I have. Let me see if I can fix that on the bottom. I don't know what's going on with that. That is weird. My chart's been acting so strange lately. I don't know what's going on down here. Anyway, so Ethereum, I mean, essentially it had this big drop. It's just kind of been hovering at the 200. It's going to try to make an attempt. It's really just going sideways. I think everything is just kind of dependent on the news and what happens next, right? Let's look at the next one. It's Phizer. Phizer's been around forever. It's actually above its 200, so it's officially in a confirmed uptrend and a bull run. Had an all-time high just right above us at 61.86, so that's about $10. And it did try to have a breakout right here and failed, but you are above the 200 and you have the Jedi green lights, and there is a dividend. So, you know, Pfizer is just one of those good little anchors to have in there. It's safe. You don't have to worry about it. Amazon, the reason I like Amazon, and it's down low, and again, you know, if you decide that you want something like Amazon, I'll tell you the reasons why I bought it, then you're looking for it to be low and you're looking to capture these for the hodl, these prices. And the reason I like Amazon is because, and this is kind of an unfortunate story, but the reason I like it is because, you know, I know that middle America got destroyed by Walmart, right? Walmart came in and you can buy, you don't go to a tire store, you go to Walmart for tires. You don't go to a fishing tackle place for fishing poles and tackle, you go to Walmart. You want a gun, you go to Walmart. You want food, you go to Walmart. You want women's feminine products, you go to Walmart. You want toys, you go to Walmart. I mean, everything's at Walmart. So it's kind of taken out a lot of mom and pop shops around the country. That's the unfortunate part. But from a business perspective, Walmart, does great in recessions, but because it buys in such large amounts, it gets discounts and it passes it on to its customers, you and me. Well, Amazon is like the next tier of Walmart. And I say that because it includes convenience. You don't have to go to the actual store. Granted, Walmart has a website, but Amazon is well known and used for their convenience and their pricing. And speedy delivery. And just due to all that and all the chaos going on in the world, I think a lot of people just like to order from Amazon at home. So in the end, you know, this thing was up at, you know, 189. It had a split. It was much higher. But, you know, it's at 189 on the chart was its high. It's at 83. I mean, you know, it's like 1.5 times or so. Back to the top. And again, if you follow these purple lines, I mean, you're essentially at pricing that you had back in 2018, which is incredible. It's incredible. You have, you know, and again, just like Tesla and CrowdStrike and Nvidia and Disney, Amazon is here to stay. It's not going bankrupt, and it's useful. It's a leader. It provides services that people want, and that convenience factor and low prices, creating a fair marketplace with all the sellers. It's going to, you know, it's going to be a good one long term. So that's why I have that. AT&T, the reason that I have that is simply just it has a great dividend yield. I don't ever expect growth out of it. I mean, I think I had it for like 2 years one time, and I think it bounced up and down like 50 cents. It doesn't grow, but it pays a sick dividend. Let's see what it is lately. Yeah, 6% dividend yield. So you're getting 6% on your money. So, I mean, if inflation's at 6% and you put all your money in AT&T, you wouldn't even have to worry about the bear market. You're actually not losing any purchasing power because you're getting a dividend yield of 6% while the Fed is figuring out inflation. So that's why I have AT&T. Walmart, we just talked about the reasons why, but Walmart is in a bull run. I mean, look, it's above its 200. I mean, look, it's been screaming. And if you guys haven't been in the markets a long time, Walmart and McDonald's did incredibly well. It's a better word than insane. Incredibly well in the recession. And why did McDonald's and why did Walmart do so well? Well, Walmart did well because of what I just said. You know, there's layoffs, people don't have as much money, and Walmart is everywhere, and they have good prices, you know, for most of the population, you know, which is middle and lower class financially. So Walmart does well, and then McDonald's is the same thing. It's convenient and it's cheap, and you want to feed your kids, and they got Happy Meals, and it's affordable, and they're on every corner. So people bought a lot of McDonald's and they bought a lot of Walmart. They were belt tightening and saving money in the recession. So those did really well. Adobe is to me like a super winner. I'm like a Mac guy and I like creative stuff. And Adobe is simply in the creative world. I mean, it had this low here of 272 where I pretty much got it. I think I got a couple dollars higher. And it's up at 336, still in phase 4, under the 200. But Adobe is used by all creatives. So every billboard you see, every flyer, every movie, every docu-series, every mini-series, you know, there's some form of Adobe products behind the scenes, or some guy using Adobe products most likely behind the scenes for creative content, from, you know, digital print to motion graphics or After Effects, whatever it might be. So like even my thumbnails, I do it in Adobe product. So Adobe is subscription based like DocuSign, and has a, you know, creativity is always going to go on. There's always going to be movies, and there's always going to be television. There's always going to be, you know, magazine and artwork on websites. So people use Adobe. So it's just a good one. And this thing had an all-time high of 700, and it's about half that cost now, about 90% upside. So it's a really good one. Bitcoin, we all know Bitcoin. Look, here's the deal. I mean, it basically, it's just in a bear run. It hit its bottom here at the 17.6, kind of held the 19, like 18.9, 19, whatever, for about 45 days. FTX happened, it dropped to 15.5, kind of bounced up. And it's just kind of hovering. It's going sideways. And this is why I didn't trade for 40 days, because I just saw this kind of sideways coming at the beginning of it, just from experience. So I do trade Bitcoin in my prop account, and I do hold Bitcoin for my personal accounts. I love trading it. The way that I trade it is I basically like the price action to be above the 200 on the hourly. I want this to be green, and I want the HMA to be blue, which is not showing up on the screen for some reason. There it is. Okay, so the HMA went blue, this is green, and you're above the 200. Those three things. So this is blue and green, you're on notice. As soon as it goes above, you buy at 17.060, and then when this goes pink and this one goes pink, you sell at 18.054. You made $1,000 a coin. I usually buy 5 or 6 at a time, so that's $5,000 or $6,000 on this pump. Boom. And then I walk my stops up. Okay. So I like to trade Bitcoin, but Bitcoin is just gonna kind of do its thing until more data comes out on probably the FTX situation and the macro environment. Again, the 200 is coming down. This is holding, definitely at seller exhaustion. I do subscribe and read all the stuff from Glassnode on-chain data. They do a really good job over there. And I'm really into like correlations and technicals and stuff. And they just do such a good job over there. And so I'm keeping an eye on a lot of the on-chain analysis, and basically what I'm getting from there right now at this current time of this video, the end of 2022, like the last day of it, is that really you just have large whales holding. They have sold some more than we expected, but mostly they're holding, And you also see buying for the other cohorts of the wallet sizes, all the way down to people that have less than 1 Bitcoin, to people that have like 10 Bitcoin, and up all the way to these whales. So you're definitely at the seller exhaustion. Now the regulation, the macro environment can drop this thing down. And I have these blue lines in here of where I think it could go. It already did hit the first one when I first drew that in, which was, I drew it in a long time ago, 6 months ago or something. So that's 15,985. It already hit it. The next one I had drawn in was 12,777.20. The one below that was 10,684.80. And the one below that is $9,708.35. And I do think there's a way that I like to look at this. Okay, without getting too like deep into this, basically what I like to do is, this white line is what's called a POC, or a point of control, on a VPVR. Okay, and this basically shows buyers and sellers and the exchange of tokens, the liquidity exchange volume. And so if you were to back this up just on like a macro level, you'll see that the point of control actually came down here to about 9,204, all the way to 9,496. So $200 lower than where I had drawn my line, which was right here. Which they tend to make their way back there, so it is possible to go that low. I'm not saying it will, but it's good to have a plan. If you don't have a plan, your plan is to fail. So moving on from Bitcoin, we have Disney. Now, this orange line is where my last buy was, which I guess was 91 bucks, and we're at 86 bucks. I like Disney. I like Disney a lot. I like the stock. I like the company. My reasons why I like Disney so much is, number one, they're not going bankrupt. Number two, they're in the Dow. Number three, they're frickin' Disney. They have theme parks, multiple countries on multiple continents. Okay, they're now involved in real estate, apparently. They have cruise lines. They have Pixar Studios. They have the best animation team in the world. They have movies, movie stars, Disney Plus. They have moats. They have revenue streams, and they cater to children, and parents love their children. So they have merchandise and all kinds of things for kids to want at the stores. And so Disney is, it's not like had a huge decline, the biggest decline they saw in 40 years. They recently let Bob Chapek go, who was the CEO, and they brought back Bob Iger. And two really big things that I didn't just mention that should be mentioned is Bob Iger was the one that secured the contract with LucasArts for Star Wars, which they have the rights to, and they also have the rights to Marvel and Avatar and all these other great films and franchises. So Bob Iger was the one that secured those. So I'm super bullish on Disney and love buying it as low as it's been. Now it's low for the year, or this was at 79.32. So if it does make its way back down there, I mean, I have to get more. So that's my reasoning on Disney long term. It always starts with the question, will it go bankrupt? If the answer is no, it makes the list to at least consider. All right. Microsoft, I mean, it's very rare that you get a decline like this. Microsoft is an iceberg. It's a juggernaut. It, again, like Disney and Apple, has a ton of revenue streams. It's like a castle with the little water around it and the drawbridge, right? From the olden days. It literally has a moat and it's secure. It's a juggernaut. It's an iceberg. So for it to come down this far is incredible. It literally hit here, broke out, retested, came down. It's right on the line, kind of like the Dow, just waiting on the data to come out. It's highly shorted right now, which is fine by me. I trade Microsoft long and short, but I own it long. And I'm really happy to own it, even though I'm an Apple guy. All my devices, like, this is a good company fundamentally in the way it's run. So Microsoft is good. Johnson & Johnson, you know, again, when you go back to diversification, it's in a different sector, you know, healthcare and health technology and pharmaceuticals. So this thing is in a bull run. It's above the 200. I mean, its all-time high was only at 186, only $10 away. So this is great, and it pays you a dividend on this too. This has a 2.55% dividend yield. So Johnson & Johnson is great. It gets you paid on the dividend. It's in phase one. It's only $10 down from its all-time high, and this particular sector does well in the recessions typically, like I was mentioning Walmart and McDonald's. Well, you know, like right now, energy's been the thing. Well, energy will drop and so will the dollar, but then, you know, other sectors will rotate, and this particular sector tends to do decent, and I like to have some of my money, a slice of it, a portion of it in this particular sector, and I like Phizer and Johnson & Johnson for that personally. Again, you know, this is kind of boring, but consumer staples, it's got a dividend, 2.75, a little bit more than Johnson & Johnson is Coca-Cola. And Coca-Cola is also above its 200 and not far from its all-time high, $67. And just simply, it's just a buy and hold. And look at Warren Buffett. He bought a ton of Coca-Cola and he makes so much money on dividends. He doesn't even worry about it, you know. Let's move over to Ape Coin crypto. This is NFT based. I do have quite a bit of this. I am definitely down on it, no question. Just to be transparent, I'm definitely down on this. I bought too much, I think. I bought the dip. So yeah, it's just kind of going sideways, kind of bleeding down. This FTX situation has just kind of riddled the whole market. So I'm just, you know, waiting. It's kind of diversification for me. In my crypto portfolio, you got different things for different reasons, and Ape Coin's tied to NFTs, and that's kind of my diversification for that. McDonald's also in a bull run above the 200. You can see it just didn't get faded like all the other stocks, did it? It didn't drop, just like I was trying to explain a minute ago. Even though everything else is a big mountain down, look at McDonald's just continuing to go up. Okay, I mean, it doesn't even look like it was in a bear market. I think this is the worst of the bear market, and it's already broken past its all-time high. And it looks like it's failing. I'll probably retest the 200 and bounce back. And if it touches the 200 on the daily, that'd be a good spot right around that 257. So yeah, I mean, long-term hold, going into recession, McDonald's is just a smart play. This is one I wish I didn't have, but I do. Mana. And I can't get out of it because I'm just down a lot on it. Luckily, I didn't buy a ton of it. And if I were to buy more, my average down would be pretty good, because I think I'm at like 40 cents or maybe a little higher. I don't remember. I'd stop looking because Mana is one of those ones that's down a lot. So yeah, just in a bleed out bear market. It's in the metaverse, which is cool. However, I don't think that it has too much people using it in the metaverse. From what I understand, the user number is very, very low, which makes me nervous, because that's kind of a fundamental thing. Avalanche, seller exhaustion, bottoming process. As soon as I pull up the chart, I can see that. So this must be a good place to buy it. $10.85. Its low for the year was $10.55. So you're within 30 cents of the low. That looks like a bottoming process. That looks like seller exhaustion, and that looks like it doesn't have a lot of action up or down, but the time is bringing this straight forward and this one down. So it's just by default. If it keeps going at this rate, it's going to meet and eventually just cross over, and then it'll get bullish. So this is one that I really like, Home Depot. And the reason I like it, again, is because it won't go bankrupt. It has a huge amount of demand. There's always going to be construction. People will always go to Home Depot. They pay a good dividend yield. They're a solid company. And I really like it technically. Boom, bounce. 2, three. It was a triple bottom. Interesting. Went above the 200 right when that big storm in Florida hit, the hurricane, and people go to Lowe's and Home Depot and stuff like that to, you know, buy materials to board up their windows or to fix things. So a lot of materials are purchased. So triple bottom technically, and then Jedi green lights, everything sinks, got above the 200 to phase one, a bull run. And it had this pivot high over here, and it tested it, it broke out and it failed, and it's probably doing what McDonald's is doing. It's going to test the 200 and bounce. So Home Depot is a great anchor in the portfolio. JNUG, I'm up almost 100% on it since I was making those videos, which we bought down on this line over here, and about 20 bucks. Yeah, so up close to 100% already, and it's got everything that you want as far as the technicals, and it's very close to getting above the 200. But JNUG is a triple leverage gold miner, and so gold is going to do well in the recession, so that's why I have that. Sushi swap, I caught in on a big momentum push, and just like I think it was Avalanche, it's got that bottoming process. Seller exhaustion is kind of doing the same thing, so you're pretty much at the lows. We can look at Shiba real quick. Same thing, seller exhaustion, going sideways at the lows. Chili's got rocked after the World Cup, I think it was. So it was doing really well. We bought it down here and we went way up, and then now it's back to kind of where we got it. No, it's lower than where we got it, I think. We might have got it up here a little bit higher. So I think we're down on that now. Yeah, I'm pretty sure. So Chili's got rocked, and I'm not sure what's going to happen with this thing. I'm not sure if it was just buy the rumor, kind of sell the news with the World Cup situation, or if something fundamentally happened to Chili's that I'm unaware of, which is possible, but it certainly is rolling over, no question. Here's the one I'm very bullish on. It's you know, kind of holding. It came all the way down from its phase 4 bear run, and it's made definitely some higher lows, kind of stayed here, made another higher low, and it's kind of right at that same blue line. Like if I were to draw one across, you can see the purple dots align with the pivot low. So it's holding, and this is MATIC Polygon. I really like this for long term. So if I were to only be able to hold a few cryptos, it would be Bitcoin, Ethereum, MATIC, Chainlink. There are others, and you know, I own all these. So, but those would definitely be like my top four. Looking at Chainlink, again, this thing is seller exhaustion, sideways bottoming process. It had a low of 528. It's at 545, pretty much its low. Chainlink is like a blue chip. It's like a Microsoft. Like, I don't know. I'm a huge believer in Chainlink, and I like what it has going on in financial payment systems, and I like that you can just plug in its code for proof of reserves for the exchanges, and it's growing. They have a really nice website, a lot of information on their website. So I like Chainlink a lot, and it was at an all-time high of 53. It's a 10 bagger to the top, and it's not too volatile, so it's kind of like an anchor, a little bit safe. If you notice, most of the stuff I have is like that. UTSL is a triple leverage bull utilities. Basically, it's good in recessions to throw one of these in there. It's not like the sexiest chart, but you know, when there's a recession, people don't have a lot of money. The one thing that they will still pay for is water and electricity, things of that nature. So this is utilities, and it's just one that I bought a little bit of, you know. AVAX, one I really like, can go up and down a lot on you, but look, there's this bottom, and it hasn't really gone below it. It's right above it again at its lows. So I like to, when I commit to something, I like to be buying on these supports and then identify the next supports lower. So the next support lower would be well, there's multiple ones. So looks like there's something right here at $49.39, $3 lower, and then it goes all the way down here to $25.95. So you know, those would be the spots I would target to buy. But I mean, you see the purple dots where the price action is, and you see this blue line. I mean, that's a low, and here's the next one at 45. So you're in that zone where supports are. and you have a bottoming process, you haven't broken down, you're very close to getting to the 200, you have seller exhaustion, you have a 6-month bottoming process, looks like a holding pattern, okay? You're not getting a lot of volume, momentum up or down anymore. It's kind of just flatlining, and you know, when it's boring, that's starting to stabilize, and that's good, okay? Now you're getting to that value thing that we talked about earlier. And last over here is Dogecoin. It had its low over here of about 5 cents, and it broke out. I think that was when Elon bought Twitter, and it came down, it retested, went back above the 200 and then failed, but it's holding better than some of the other ones. So it's about 7 cents right now, and low volume though. You know, it doesn't to me have like a ton of functionality, you know, for like utility, but it certainly is speculative and it's fun. There's a lot of hopium and that kind of thing around it. It's not a Microsoft or a Johnson & Johnson or an Adobe or a Home Depot for me, but it's a YOLO. You got it in there, you know, it's very inexpensive to buy, and you never know if one of these things could turn into a lottery ticket for you. So that's about all I have. Long video, thorough video, my thoughts and some technicals, my thoughts on the markets, kind of explain it in an easy way if you're new to markets. I've been in it for a long time, and you know, you got to keep your emotions in check. Try to not be too emotional. Try to think logically, have a plan, and implement that plan based on logic and not emotion. Don't always listen to all the noise. There's a lot of noise out there. Markets overreact like a pendulum. Use the 200 as a reversion to the mean. In a bull run, they'll go way up, and erratic above it. In a bear run, they'll go way up below, and they'll always revert. The media cycle will do what it does, and the variable is always time. My name is Chris. This is Wheelhouse Trading, and welcome.